Hey guys, welcome back to my channel. In this video, I'm going to lay out my argument on why I believe stocks are still set to plunge and plunge even further from their lows now, and why gold is set to soar and why this is bullish. So if you've been paying attention to some of my past videos on gold pricing, I've created a gold pricing model that basically forecasts the ceiling and the floor. The variables that I use is the money supply, the GDP, the nominal GDP, and the stock market capitalization. That's it. Now, in my previous videos, I've been using M1 as my money supply usage. I don't believe that is a broad enough measure to capture the real scenario of what's been going on in the economy. And if you do use M1 in my model, then what it shows is that the gold is tracing more to its floor than its ceiling, and it says that gold is undervalued and poised for an upswing. But when you use M2, it shows that gold is actually tracking very close to its ceiling, and this may sound counterintuitive that it's poised for a bull market run if it's already hitting the ceiling. You know, you would expect it to pull back like it did in 2011, like it did in 1980, the last two times that gold was pressing up against the ceiling. But those were caused by improving economic situations. In the 1980s, we had falling interest rates, falling inflation rates. In post-2010s, we were recovering from the 2008 credit bubble crash. We were seeing a reconsolidation in the housing markets. We were finally beginning to repair, and the jobs market was slowly beginning to improve. Those situations are not happening right now. We're not seeing an improving economy. We're seeing a deteriorating economy brought on by high inflation, driven by excessive monetary policy that's been creating a lot of debt and a lot of new money, driving up prices. So this is definitely bullish for gold, and how this bears out in my model over the next 3 years is that the ceiling is going to lift drastically, and I believe this is going to drag up the gold price over time. Now, why do I think this ceiling is going to push up drastically? It's because I believe that the stock market is going to fall drastically. The stock market is set for a huge plunge. The 10 to 15% drop that we're seeing in stocks right now is a nothing burger. If my calculations are right, based off the trend of the 30-year Treasury rate, if 30-year Treasury rates hit 4% before the end of this year, we are looking at a potential, and follow me on this, we are looking at a potential 35 to 40% drop in the stock market. And if so, that is going to be catastrophic to growth. That is going to be catastrophic to investments. And the outflows, that huge panic outflow, we would not have seen a drop in this stock market like we have seen since 2007 and 2008. If we start seeing this, we will see that money flow somewhere. They're not going to flock to bonds like they did in 2008. They're going to flock to precious metals because there's literally nowhere else to put it in. Why would you flock to bonds when interest rates are constantly going up? Instead, these high interest rates are going to make stocks value cheaper. There's going to be a huge sell-off, and it's going to go into the gold market. If you follow the gold's technical analysis chart here, you can see how that for the past 4 years, 3.5 years, since gold bottomed out at below $1,200 an ounce in September of 2018, gold's floor has risen by a whopping $700 an ounce in less than 4 years. And if we extrapolate that trend, then that means by the end of 2022, gold's floor, the floor price for gold, meaning the minimum price for gold, is going to hit around $2,000 an ounce, which means that since gold will trade in a channel of, say, $500 plus or minus, between the ceiling and the floor, then my forecasting, and this is just a rough forecast, that gold will probably end up somewhere around $2,400 an ounce by the end of this year is not that far-fetched. The upward trend is definitely suggesting it. We have been seeing a fall off in gold since it had its second peak in early March of 2022, but the reconsolidation is at this very stable rising floor, and I have no reason to believe that gold will break below this or go into a bear market. All economic fundamentals of rising inflation rates, falling stocks, are pushing gold up. I mean, yes, rising interest rates may make gold look more expensive, but it does the same thing to stocks. And here's the thing. Investors who panic have got to park their money into a safe haven. The only safe haven available is gold. It has been the historical safe haven of choice. Unlike 2008, where it was causing falling bond yields, where investors had a choice, you could buy precious metals or you could buy government bonds for that safe haven. Because the Fed was buying government bonds, we're not seeing that right now. The Fed is unloading government bonds, so that's a bearish market in the bond market. It's going to be bearish for stocks. If you're having a bear market in bonds and a bear market in stocks, that is bullish for gold. And we are going to see this push up over $2,000 an ounce before the end of this year. I feel absolutely certain of this. Now, of course, I'm no certified financial advisor. I'm not here to give you any kind of certified advice to say, yeah, this is what I would do if I were you. But my point is giving you as a macroeconomic analyst and someone who is peering into what I think the fundamental driving factors are for stocks and gold, it's looking really bearish for stocks and bonds right now, which makes gold look all that much sweeter. And if the model is right, we're going to see a vector push up in gold. So essentially, I don't expect gold to continue hugging its ceiling like it has for the last 2 years. I mean, it could. And if it did, we're going to see gold soar. We'll see gold soar over $3,000 an ounce by the end of this year. But I'm trying to be realistic here. And my realistic expectation is that gold should end, on average, around $2,400 an ounce, probably a little bit below that. But if it goes as I have, done a rough estimate on, then we're looking at over a 30% year-over-year return for gold. And that is historically been some of the strongest annual returns that we've seen in the precious metals market since the 1970s. So, and I do think that this is real. I think that this is a strong parallel to the 1970s because we're having negative interest rates, we're having rising inflation rates, and we're having an overvalued stock market. So unlike the 1970s, which was characterized by a cheap stock market, we don't have cheap stocks right now. We have very, very expensive stocks driven by very, very low interest rates. Now those tides are reversing, and this could really, really press up gold. It's going to be very interesting to see. But if my model is correct, if the model trend is right, that it's going to show this push up now, then look for gold to hit around 2,050 by the end of this quarter. So we've got about 2 months, a little bit under 2 months. Let's see what happens if gold jumps by almost $200 an ounce. If it doesn't, then my model is overperforming and I need to adjust. But if it hits about 2,050 or say over 2,000, then there could be something to the model as long as interest rates adjust appropriately. But this new revised model that I've come up with explains why we've been seeing a lot of stalling out in this gold price. Gold wasn't at the floor and investors were just ignoring it. No, investors were buying it and gold was hitting the ceiling. It's just that it was competing with stocks, and stocks were being driven up because of very, very dovish monetary policy. But here's the consequence of that. We're getting rising inflation and negative interest rates. Now that interest rates are rising and those bonds are being sold off, we're seeing liquidity being sucked out of the financial asset sector system. There's going to be the worry that this will tip the economy into recession, which will cause a flight to gold. There's going to be a flight to precious metals, especially with rising inflation rates. So keep that in mind. And this is going to be, again, this is going to be exciting, not in the good way for the economy, but this is going to be exciting because up until now, I've been kind of puzzled about gold. Now I understand what's been going on, and I am incredibly bullish on this. So we'll see if I'm right, if my prognostications are out. Again, I'm just giving you this rough, middle-of-the-road estimate. We could see some fluctuations in gold, but we should at least be seeing gold press up in the coming months. As I have been saying, and I know you guys get tired of hearing this because this has been a narrative that I've been pushing forth since last July. Believe me, it's been frustrating to me why we haven't been seeing that push up in gold. But the forces are there, and all we're waiting for is the top to be blown off on the ceiling, characterized by falling stocks. So the more that stocks fall, the more bullish I'm going to get on gold. So let's see if I'm right. If I'm right, then we should see that by the end of this quarter, the Wilshire 5000 should end up around 39,000 points by the end of June. The Wilshire 5,000 right now is around 42,000. So it needs to drop another 3,000 points. That will be signal one that my predictions are holding true. And that's in the wake of a 30-year Treasury rate of 2.86%. Right now, Treasury rates are even higher than that. So we could be seeing an average quarterly Treasury rate higher than this, which would push that Wilshire down even further. But let's just roll with this and see if the Wilshire pushes down to 39,000. If so, then we should be seeing that relative push up in gold ceiling price, where gold ceiling price will lift up to $2,400 an ounce from where it is now at $2,050, and we should see roughly, say, half of that in gains to gold from its current price of around $1,870. Gold should push up to, say, $2,050, $2,060 or so. So keep that in mind. Keep an eye out for that. I will be posting regular updates on this, probably on at least a monthly or bi-monthly schedule, just to track on where this is. But we could be in for a very, very strong bull market in gold, and a powerful bear market in stocks that will shake the world for years to come. Guys, as always, thank you for watching this video. If you like the content that I produce, just show me some support. Click that like button, comment on the channel, subscribe to my channel if you haven't already, and make sure you click that notification bell so you're notified whenever I upload a video. And as always, drop a comment. Let me know what you think about this. Let me know your thoughts, whether you're equally bullish or if you think I'm too bullish. Keep me in check. Give me a reality check. If you're saying, hey, wait a second, EA, this is way too bullish for gold, or it's not bullish enough. If I'm onto something, let me know. If I'm way off in left field, let me know. Hey, at the end of the day, I'm human. I mean, so far I've been right about many things, but there have been a couple things I haven't been completely accurate on. More often than not, my prognostications tend to hold true. Let's see if this one does. Once again, guys, I thank you for watching this video, and I'll talk to you next time.